Good afternoon, my fellow traders. My name is Michalis. I'm one of the market analysts here at HFM, and I'd like to welcome everybody to another live analysis session. Today, we're going to be analyzing the market. We're going to be looking at certain trade setups. We're going to be looking at various strategies, both for short-term and swing-term approaches as well. We're going to be looking at different methodologies and techniques. And of course, we're going to be looking at what is driving and what's about to be driving the market. Because yesterday, of course, we had the Japanese yen see a lot of volatility because of the Bank of Japan's rate decision. Their rate decision was unchanged, but of course the expectations for the next coming months is that the Bank of Japan will start to again increase interest rates. That is something which already has been confirmed by the chairman. He will speak also on Friday, ladies and gentlemen, so keep that in mind because there will be a lot of volatility from the yen on Friday also. Tonight, ladies and gentlemen, we will have the main event. We will have the Federal Reserve confirm their rate decision, almost guaranteed that it's going to be no change to their federal fund rate. So no adjustments to interest rates, but something which is going to be extremely important is that there have been so many developments over the past few weeks that there's going to be very specific, precise questions to the chairman, Mr. Jerome Powell. And of course, he will have to answer those questions. And as he answers those questions, it will create a lot of volatility because it will clear up and clarify exactly what the Federal Reserve is expecting to take place in terms of its monetary policy in the upcoming months. That alone will create a lot of volatility on the US dollar, the NASDAQ, S&P 500, Dow Jones, oil prices, and of course also gold as well. Also, tomorrow we will have, in addition to the rate decisions today and yesterday, we will have rate decisions from the Swiss National Bank, mainly affecting the Swiss franc and the Bank of England as well, which is affecting the cable, the Great British Pound, and the FTSE 100 as well. So that's something for us, ladies and gentlemen, to keep an eye on. We're going to be speaking about all these announcements today. So keep an eye on that, ladies and gentlemen. Now, let's start off with looking at gold. Now, gold, ladies and gentlemen, we have to take into consideration that it's inversely correlated with the price of the US dollar. Now, there is certain times where we do see the US dollar and gold simultaneously increase in value. So that can happen. A lot of the time that happens when there's expectations of very high inflation rates, where investors want to simultaneously use the US dollar to take advantage of high interest rates, which are likely if there is high inflation. But at the same time, they use gold in order to mitigate risk of a potential harsh landing and a recession. And at the same time, gold for many decades has been used as a hedge against inflation. So it can simultaneously increase in value. It doesn't necessarily mean, because there's traditionally known to be an inverse correlation, that they cannot both increase or both decrease in value. Now, at the moment, ladies and gentlemen, we saw this massive, very large upward price movement, ladies and gentlemen. So we can see here, we've got a very, very clear regression channel here, ladies and gentlemen. Now, we've broken outside of this regression channel, but when we look at the medium-term price movement, we can definitely see as it declines here, ladies and gentlemen, we can see that it's declining back to that significant level here. So this is a level where we found resistance. We've broken through that resistant level, and then we're retesting that level. This is something which is very well known within price action analysis. So we've broken through that level, we're retesting that level, we're breaking out of that regression channel, but we've lost momentum. We're basically seeing a sideways trade, range-bound trading conditions. So that's something we need to take into consideration. Now, if we're looking at that, ladies and gentlemen, I'll go on to actually a 1 hour time frame so we can better, or even a 30-minute time frame, so we can better see this sideways price movement. Now, if we look at this sideways price movement, we can definitely see there's a key support level here, and there's also a key resistant level here as well, ladies and gentlemen. So there's very key levels here, very key breakout levels. Now, if we're going to see the continuation of the range bound trading conditions, then the most important thing is the average price. And I'll explain exactly, and I'll actually show you why that's so important. If we're looking at the bars, the candlesticks within the range, we've got 91 candlesticks. So I'm going to add here a 90 moving average, 90 period moving average. I'm going to have it on the method of simple, like so. Now, the average price movement based on this, ladies and gentlemen, is here. Now, if we are going to see range bound trading conditions like we've already seen in the past 30 hours approximately, what you'll notice is the price continuously hits that average price. So you can see as it gets to this resistant level, it declines and hits that average price. If it gets to the support level, again, it just retraces back to that average price. So that is, of course, something we have to take into consideration. Now, I've got some questions here. I'll quickly answer these questions. Bear with me, ladies and gentlemen. Let me just read these questions. I've got some questions here. I'll quickly answer these questions. Somebody says here, if there's going to be a bearish breakout or a bullish breakout. So this is something we'll look at now, ladies and gentlemen. The first thing I want people to take into consideration is we're in a range-bound trading conditions. So because we're in range-bound trading conditions, ladies and gentlemen, you have to keep in mind that the average price is extremely important, because if we're going to get to the resistant level and retrace back downwards, the level which is hit more than any other level is that average price. If we, for example, aim for the support levels, you can see sometimes we get a higher swing, sometimes we get a lower swing. So sometimes it's missed, whereas the average price is always hit. The same applies if we get to these support levels, you can again see the average price is always hit, ladies and gentlemen. So if we're going to see the continuation of the sideways price movement, that average price is extremely, extremely important. Now, let's say we're going to get a very big announcement tonight from the Federal Reserve. So, of course, expectations across the board, 100% expectations at the moment, is that there's going to be no adjustments to interest rates. Now, because there's going to be no adjustments to interest rates, we have to keep in mind that if there's no adjustments, everybody believes there's going to be no adjustments to interest rates. But the main thing is the Federal Reserve's chairman's forward guidance. Now, if he's going to give a forward guidance, ladies and gentlemen, that the interest rates are not going to increase at any time in 2025, and he's going to give real concern over the developments in the Middle East, if he's going to give real concerns in regards to a harsh landing, concerns in regards to, for example, should we say, the trade policy as well. So he's got a very dim outlook, ladies and gentlemen. Now, if that's the case, then we can very easily, because of the deterioration of the risk appetite of the market, for example, get upward price movements and a breakout of this level. And if we go to our 2-hour time frame, sorry, that's a 1 hour. If we go to the 2-hour time frame like this, we can see even though we've got that decline, ladies and gentlemen, the decline, if we look at a 75 bar exponential moving average, which is very well known on the 2-hour time frame. Another very well-known moving average for the 2-hour time frame is the 100 bar simple moving average. I'll make this a green, I think. There we go. 100 bar simple moving average. What you can see is that gives us a very key trend line. And if we look at that trend line, even though we've got that downward price movement, the price is trading above this level. It's very clearly trading above this level. So even though we're seeing a sideways trend, we're seeing a sideways trend with a bullish bias. Okay, so that's something we of course need to take into consideration. That will also really start to materialize and see stronger buy signals if we get an extremely hawkish Federal Reserve, and not necessarily only hawkish, but a Federal Reserve which really points out the concerns to the market. Concerns in regards to a harsh landing, a recession, concerns in regards to the trade policy and the Middle East escalation as well. So that is a scenario where indeed we can see real bullish price movements potentially for the price of gold. Now, traders have got three approaches that they can take into consideration if we're going to see upward price movement. The first, ladies and gentlemen, is they can look at a medium term trade, in which case they're looking to see very large levels of profits, but it's not something which is going to happen within a few hours. It's something which may happen within a few days, or even potentially, ladies and gentlemen, within a few weeks. So that's one scenario. A second scenario, ladies and gentlemen, is that they can take into consideration short-term trades. So multiple short-term trades rather than one single large trade. And they're looking for smaller profits. But of course, those smaller profits, the idea is that multiple smaller profits will add up as well. Then you've got the third approach, and that is simultaneously taking into consideration upward price movement and also, medium-term swing trading approach, and at the same time short-term approach. So that's something traders also may take into consideration. Now, because we've got that bullish bias here, what we can take into consideration is there is certain levels that traders look at. Now, one level that traders look at is the 61 level. So here you can see the 61 level. Another level that traders look at quite a lot is 65 and 70 levels. So basically what we're looking for here is to speculate when there is 61% momentum being regained. So I'm going to use 61, but keep in mind it's also well known that people use 65. Some people use 70 if they want a slightly delayed signal as well. Anything below 50 though, ladies and gentlemen, keep in mind that is significantly increasing the risk of trading upwards, whereas actually that's a retracement and it's just going to continue trading downwards. So there you've got higher risk of the market moving against you. So if we look at here, ladies and gentlemen, if we look at here, we've got, like I said, really key levels is 50 and 61. Two really key levels here, ladies and gentlemen. Now, traders may look to take into consideration only one of the two, or they may look to take into consideration both of the two as well. So you can look at trades here, medium-term trades. So like I said, it may take a few days for this to hit your take profit. Maybe it will take a few weeks even. Now, based on this, ladies and gentlemen, this approach, your stop loss, I'll put a stop loss in black actually, so you can differentiate between the two. Now, a lot of traders may take into consideration putting a stop loss here. Why, ladies and gentlemen? Because very clearly you can see that we're outside of the sideways price range and we're below both trend lines. So if we drop below those trend lines, then of course we've got a different outlook, a different bias, ladies and gentlemen. So here we got a stop loss. Here we got two trades that we can potentially open to speculate the upward price movement. Now, the difference between the two is 1.40. Okay, so a lot of traders will look at 2.80% as a take profit, which is basically here, ladies and gentlemen. So that's basically a reward to risk ratio of 2 to 1, because you're leaving this much room for volatility in regards to the stop loss. So you're leaving quite a lot of room for volatility in regards to the stop loss. If the price comes up to here, ladies and gentlemen, that's if the price comes up to here. What traders may want to do is maybe even potentially put this slightly lower. So then it's also the breakout level, because that's also the breakout of the current range. So basically here. Now, if you're slightly entering the trade at an earlier level, then of course you got 1.20% differentiate between the entry and the exit. So actually, it's 2.40 in regards to how far away the trade is. So 2.40 is actually here. So it's actually here, ladies and gentlemen. So that's where your take profit is. Now, here, if we look at a daily time frame, you're actually almost trading all the way up to an all-time high, but not quite at the point of rejection. You can see that we're below the point of rejection here. So those are two trades which may take a few days for the take profit to be hit, if it is hit indeed. But you got here a swing approach. Now, simultaneously, like I said, we're using that. We've got that bullish bias because, like I said, if we're looking here on the 2-hour time frame, we can see we're trading against both lines, trend lines, the 75 period exponential moving average, the 100 period simple moving average, breakout level as well, and also regain of momentum. We've got one trade here and then the second trade here, and of course we've got our take profit out up here, stop loss down here. Now, simultaneously, what a lot of traders will do is at the same time they go here onto a 3-minute time frame. They have a 200 bar simple moving average, which is very important for the 3-minute time frame to speculate upward price movement. And they can use the same scenario, ladies and gentlemen. Let's say, because we can see it's declining at the moment, let's say it declines slightly further, maybe declines to here. Now, based on that, ladies and gentlemen, again, if it regains momentum, so if we get a decline like so, and then it regains momentum upwards, as soon as it crosses above 61%, then a trader will look at a short-term trade. Okay, keep that in mind, a short-term trade. And they may look to scale in and scale out. So for example, they're entering at that 61, they're entering at the breakout, which is basically at this level here, and they'll look at a third trade with the same distance. So you can see there's very key same distances between the trades. And again, stop loss, placing below our trend line, which is basically here, ladies and gentlemen. So you're looking at simultaneously a longer term outlook where you're looking to profit from a longer term upward price movement, and at the same time you're looking at the shorter term price movement as well in the same direction, not looking to hedge but the same direction. So that's something we can take into consideration, ladies and gentlemen. This is the 2-hour time frame. This is gold, ladies and gentlemen. Like I said, it's massively related to the US dollar as well. At the moment today, the US dollar is the worst performing currency. Now, if we look at currency performance, ladies and gentlemen, I can confirm to everybody how the performance has been so far. Worst performing currency so far is the Canadian dollar and the US dollar. The best performing currency of the day is the Japanese yen and the Australian dollar. Those are the two best performing currencies. Now, if we're looking at metals elsewhere as well, if we're looking at, for example, copper, palladium, platinum, all metals are increasing in value today. The best performing is platinum because it's the most volatile as well. So that's something for us to take into consideration. Now, if we're looking at a month's performance, all metals again are increasing in value. So we can see copper's increasing, gold is increasing, palladium, silver, platinum, all of these are increasing in value over the past 30 days. So you can see it's not just about technical analysis. We're looking at all-round analysis to speculate that upward price movement, which potentially may take place. And again, that, like I said, will depend on tonight's Federal Reserve forward guidance. Okay, if we're going to see something where it's going to really trigger one of two things, either lower interest rates, in which case the US dollar will significantly decline, investors will prefer gold as their safe haven asset. Alternatively, if that's not the scenario, and instead we're looking at a decline, an extremely hawkish Federal Reserve, but one which provides a lot of concerns, and the should we say risk appetite of the market significantly declines, then again that also is an indication of potential upward price movement. Something which is key, though, ladies and gentlemen, is to also be looking at the US dollar index. Which I don't have here at the moment, but anyway. So let's also turn our attention to, because we mentioned, of course, that we're going to look at other assets as well. Here we've got the NASDAQ, ladies and gentlemen. NASDAQ's declining at the moment. We did actually see quite a lot of upward price movement earlier on today. But we dropped below the trend line again. Potentially, we're dropping below the trend line, ladies and gentlemen, because we're expecting an extremely hawkish Federal Reserve, which is understandable because we have to take into consideration that oil prices that have been over the past week increasing in value from anywhere between 8% all the way up to 13%. So that's a very big increase in a very short period of time. Inflation in the UK increased in value. We saw this morning, and the expectation is in the US because of higher oil prices, not just in the US, but everywhere else as well. In addition to supply chain shocks, because of the trade policy, that there is potential for upward pressure in inflation. So a lot of people are expecting an extremely hawkish Federal Reserve because of expectations of higher inflation rates. So potentially that's why we're seeing a decline again. If we're looking at that, ladies and gentlemen, we can definitely see we're honoring this trend line here. We can see we're obtaining lower highs. We're trading below both trend lines at the moment. If we look at an RSI, I don't have it on my screen, but I'm pretty sure we'll be trading lower on the RSI. We can definitely see we are trading lower on the RSI as well. So we have indications here. A lot of people may see and look at this on, for example, a daily chart and say, that's really strong upward price movement, I'm going to buy. But if we look at this 2-hour time frame, there is signs here of weakness, which is understandable considering what potential developments we may see tonight, tomorrow, and in the upcoming days. So we can also look at a similar scenario. If we're looking at this as a retracement, ladies and gentlemen, traders may take into consideration, again, that 61%. So this is a 61% here, ladies and gentlemen. So if we're looking at that 61%, there's two scenarios that we can look at. I'll actually zoom in slightly so people can see it better. There we go. So if we're looking at 60, this black line is where we're entering the sell potentially. Traders can even look at the high. The high is up here, so that gives a slightly further away stop loss, gives more time and space for volatility. Alternatively, they can place it just above the moving average, which is a closer stop loss. Either or is okay. I'm going to use the high as just an example for this scenario. So the stop loss is 0.60% away. We want 2-to-1 reward to risk ratio. So we're looking at the take profit being all the way down here, 101.20%. So that's all the way down here. That's also in line with the support level as well, ladies and gentlemen. But that's something we can take into consideration. If it declines below there, we can use that as speculating downward price movement in the medium term. It doesn't matter today, guys, if we get some upward price movement or generally speaking, we see some upward volatility, as long as it's not hitting the stop loss. And that it starts to gain downward momentum. So that's something for us to take into consideration. Like I said, switch also to the smaller time frame, and we can see here we've got a bearish bias, but we've also got a retracement here as well. So bearish bias, we've got a retracement. 61% is here. That's 61%, ladies and gentlemen. We can look at the breakout, which is basically here, and then same distance on the third trade, which is here. There we go. So those are three shorter term trades. So we're, for example, looking at here 4,000 points. Somebody may say, what do we mean by 4,000 points? I can give an example. If we put in a sell pending order, for example, let's say we put in it here at the 61%, and I can show you what I mean by 4,000%. 4,000, sorry, 4,000 points. So let me measure that for you. $4,000 points is basically here. That's 4,000 points. So that's what you potentially be aiming for. Potentially. So what we're actually doing is we're also scaling in. You can also, if you wish, scale out as well. So this is a big scenario, ladies and gentlemen, where we can look at this also. And like I said, if we look at the 2-hour time frame, we're looking at that also being the scenario for the 2-hour time frame and also the 3-minute time frame as well. Now let's look at the euro against the US dollar. Here we go. So this is the euro against the US dollar. This is actually at the neutral. So at a neutral scenarios, neither give an indication of upward price movement or downward price movement. So if we're looking at here, let me enlarge the moving average. Here we're trading below the 75, but we're trading above the 100 bar simple moving average. We've got higher lows. We've also got higher highs as well, which is an indication of downward price movement. But if we're looking at slightly more longer term, it's declined back to the level that, like I said, we're retesting that level. So it's actually back to that level where we retested. And the RSI is trading below. So we've got some indications of upward price movement, some indication of downward price movement. For example, like I said, we've got lower lows and lower highs. We're trading below the 50 on the RSI. That's indications of downward price movements. But at the same time, we had the breakout here. We're retesting it here. So the question now is it going to rebound after that because it's been retested? So that's something we need to keep in mind. I've got a question here. Why don't break up? What do you mean? As an upward breakout? Is that what you're referring to? It could be a scenario. Like I said, we're at a neutral level here because we're trading in the trading cloud. We're trading between both levels. So we've got some indications of upward price movement, some indications of downward price movement. For sure, if it sees bullish momentum, then it's that scenario that we've gone back to this level. So the support level being flipped onto the resistant level being flipped onto the support level. We found support, and ideally we get some support for the Euro USD from the Federal Reserve as well. And we indeed will look at a breakout upwards. So for example, if it increases above here. So you can see 61% is also in line with the trend line here, guys. So that's also important because if we want to trade upwards, we need to be trading above the 200 bar simple moving average to get an indication from that moving average. So again, if we increase above this level, we can potentially look to speculate upward price movement for the euro against the US dollar. But don't forget, at the moment, guys, worst performing currency is the US dollar. Okay? So I've got a question here. Somebody says, how is the euro performing? I'll have a look for you. So let's look at that now. So if I look at currency performance, actually now the Canadian dollar and US dollar is more or less the same. Both are the worst performing, more or less the same. Now, the euro is in the middle of the table. The best performance is Australian dollar, Japanese yen, New Zealand dollar. The fourth best performing of the day is the euro. The euro index is trading 0.13% higher, ladies and gentlemen. So the best performing is actually the US dollar against the Australian dollar and US dollar against Japanese yen, more or less the same, ladies and gentlemen. So here, for example, we've got the US dollar, Japanese yen, 3 minute time frame. You can see very, very clearly we're below the trend line, and you can see exactly why I'm, saying to everybody that this trend line is so important. You can see the way we're bouncing off these levels, and traders could, of course, use, this 61% level. So if it declines below 61%, so here, decline below 61%, indication of downward price movement. That is the scenario. You can see lots of downward price movement since then. And the same scenario could have been done here as well. Indication of downward price movement. We're currently trading lower than that level also. So there's a lot of areas that we could have taken into consideration here. So you can see a more clear direction with the US dollar against Japanese yen compared to the Euro USD. Let's go to a 2-hour time frame. So here we are trading. Apologize. This is the NASDAQ. Here we go. So here we're trading above both trend lines, but we're trading below on the RSI. Momentum is downward momentum as well. So if people do want to speculate the continuation of the decline, we just need to be cautious that we're not going to find support at our trend line here. Also, what a lot of traders will do and take into consideration also is looking at previous retracements. So if we look at this retracement, 55%, 0.55%, this retracement, 0.77. If we're looking at this retracement here, 0.45. So on average, an average retracement size, 0.60. That's definitely more or less where we're at now, almost at 0.60 on average. That basically brings us down to here. And of course, the average price movement will continue to move upwards as that moves downwards. So that's a very key level. The traditional retracement that we're seeing of the latest wave, if it is a retracement, is that it goes down to that level. That goes in line, like I said, with the trend line. So if it goes down to that level, we have to be cautious that the price is not going to again start to increase higher. If it breaks below that black line, then sell signals are materializing and seeing stronger indications. But of course, you have to keep into consideration if it declines to that level, for example, if it declines to that black line, that's a decline of 0.61%. Is that enough to trigger an oversold price? And we may get a retracement. You have to be cautious of that, of retracements. But if we're honest, if we're looking at this downward price movement, that's 1.85%. If we're looking at even smaller downward price movement here, it's 1.30%. But there is times where we see strong impulse waves like that. So there is times that we do indeed see that. I've got another question. So somebody says that he's a beginner and struggling to understand. This is live analysis. So if you're a beginner that's never traded before and you don't understand, keep in mind that we do have webinars, ladies and gentlemen, webinars which are based for beginners also. So for example, if you type in HFM webinar, for example, on Google, go to HFM's webinars, you can see there is webinars here. These webinars are more step-by-step and more designed for beginners. At the moment, there's only 2 webinars because the month is going to end next week. It's the last week of the month. But of course, then the new schedule comes in. So in a week's time, you'll see an additional 10 webinars there. Some webinars are extremely basic. So keep in mind, there's a lot of educational tools that we provide to help people that have never, ever traded before. A good example is this here, webinars. Now, ladies and gentlemen, let's also take into consideration that tomorrow we have the Bank of England speaking and the Swiss National Bank. Let's look at the US dollar against the Swiss National Bank. So here we got the US dollar against Swiss National Bank. We're attempting to trade above the 2-hour moving average. Actually, this is probably one of the only currencies where the US dollar is trading slightly higher, ladies and gentlemen. Let's zoom in here. So the price of the day opened here. That's where the price of the day opened. So you can see we are higher. We're tempted to trade above this trend line. Let's look at the performance of the Swiss franc. Swiss franc is more or less the same as the US dollar. It's minus 0.04%. The US dollar is minus 0.10%. Not much of a difference. So we can see the Swiss franc is also struggling today. Something very key about the Swiss franc, which is pressuring it, is that it's one of the only countries in the world which is experiencing deflation. Which is a big issue because, ladies and gentlemen, if we see deflation, it significantly pressures and damages economic growth. Why? Because nobody will be willing to buy anymore. Even simple things such as food or investments such as property, nobody's willing to buy because they'll say if there's deflation, if everything's decreasing in value, I won't buy today. I'll hold back and I'll buy in a week because it's going to be at a cheaper price. So everybody stops buying simple things, advanced things, investments, and so on and so forth. And when you get that, ladies and gentlemen, it triggers significant economic pressure. A lot of the time, it will trigger a recession as well. Now, because of that, the Swiss National Bank is expected to cut interest rates to zero. That is extremely low. Keep in mind, yes, of course, the Swiss National Bank, if we go back 5 years ago, uh, for on quite a few occasions, they did for negative interest rates because of deflation. Nonetheless, it's something we haven't seen in quite a long time. So there is a chance, ladies and gentlemen, that we may see significant pressure for for the Swiss franc from the Swiss National Bank, especially if they're extremely dovish in a scenario where pretty much everybody is most likely going to take an extremely hawkish view. Bank of Japan took quite a hawkish view. The US Federal Reserve tonight is expected to do so. UK inflation today was higher than expected. It was 3.4%. So that's something, of course, which is going to trigger a more hawkish Federal Reserve, more hawkish Bank of England as well. So if they are decreasing interest rates, they're going to be one of the only ones which are going to be doing so. So that's why we're seeing upward price movement. Even as I'm speaking, we can see it's moving upwards. So we're trading above both trend lines, trading above the 50 on the RSI. If we go to smaller time frame, here we've got a 3-minute time frame. People can potentially look at the breakout level, for example. We're trading above the 200 bar simple moving average, so that's very key. People may look at the breakout. If we look at this as the breakout, if it increases above there, that's potential for upward price movement there, ladies and gentlemen. And keep in mind that is only a signal based on breakouts, which is technical analysis. So that's something for us to take into consideration. Now, the last thing I would say, ladies and gentlemen, is it's very key to look at expectations, how expectations change after the Federal Reserve's forward guidance. So basically, their press conference, ladies and gentlemen. So the Federal Reserve will confirm their interest rates at 6 o'clock GMT. At 6:30 GMT, the chairman, Jerome Powell, will start his press conference. So, for example, at the moment for July, 85% believe the Federal Reserve will not cut interest rates. Now, if that suddenly becomes 90%, then of course that creates a lot of volatility for the stock market. The stock market potentially may decline because a more hawkish Federal Reserve is negative for the stock market, generally speaking. Gold may increase, gold may increase in value if it triggers a very strong risk off appetite. Otherwise, it will decrease because, again, higher interest rates is negative for gold. Alternatively, ladies and gentlemen, it could be, for example, extremely dovish. If that's going to drop from 85 to 80 to 75 to 65 and so on and so forth, then we're going to see different type of price movement. A weakening US dollar, a strengthening gold, strengthening stock markets, and so on and so forth. So we need to see exactly how this is going to change after the press conference. For example, like I said, now 85% believe they're not going to cut interest rates. Yesterday it was 83, a week ago it was 81, a month ago it was 67%. So you can see it's gradually increasing in value. So that's something we need to keep an eye on, because that can really pressure the stock market if that really starts to materialize. So that's something, of course, we're going to keep an eye on. Another thing traders can keep an eye on, ladies and gentlemen, is here. We've got the fear and greed index, which is basically based on the VIX. It's based on the put and call option ratio as well. If this starts to increase in value, ladies and gentlemen, so for example, if it goes to 0.80%, 0.75, that's indications which are really negative for the stock market, such as the NASDAQ and S&P 500. If the VIX starts to increase as well, that always negative for the stock market. This previously was at greed, which is positive. Slightly positive, not extremely positive, slightly positive. It's dropping to neutral, even though the stock market hasn't seen a significant decline yet. So we spoke about that actually. Now, something we, of course, need to take into consideration. Let's go to the NASDAQ. More or less at the neutral level, waiting for it to regain downward momentum. That's something, of course, we're going to keep an eye on. What traders also can look at for sure is, for example, the performance of each individual component. So if we look at each individual component, let's say, for example, if we look at all components that hold 0.5% and above, so that's 30 stocks, ladies and gentlemen. Let's get our calculator out. There we go. So from 30 stocks, how many are increasing? We have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23. So 23 over 30, 77% are increasing in value. That's extremely high. If that suddenly drops to only 50%, again, the scenario is changing. If it remains 70, 75, 80%, then we're getting continued indications of upward price movements. Somebody's asked the question, what moving averages are these? So on a 2-hour time frame, a very well-known moving average is the 75 bar exponential moving average, which is this orange. The green is the 100 bar simple moving average. Now, on the 3-minute time frame, a very well-known moving average is the 200 bar simple moving average. That's a very well-known. Also, traders may take into consideration crossovers as well. A lot of people use the 50 and the 100 for crossovers. So I've got a purple and a green here. So we have a crossover upwards here, and we do get upward price movement. For example, we've got a crossover downward here, and we've got downward price movement. Crossover downwards here, again downward price movement, and so on and so forth. So people can also look at crossovers. Somebody says, what's a nice setup for crossovers? A very well-known setup for crossover is also the 18-period simple with an 8-period exponential. This is very well-known as well. So you can see downward crossover here, it did decline. upward crossover here. Again, that was a very good trade. Downward crossover, upward crossover, upward crossover here, downward crossover here. So this is something we can look at as well. So, ladies and gentlemen, that's the end of today's session because we've been speaking for 45 minutes. Very quick recap. We're expecting a lot of volatility on the stock market, US dollar, gold, and also oil. The best performing currency of the day, ladies and gentlemen, is at the moment the Australian dollar and Japanese yen. Both are doing more or less the same. The euro's in the middle, ladies and gentlemen. The pound is also in the middle. Tomorrow we will have the Bank of England's rate decision. The worst performing currencies of the day is the Swiss franc, US dollar, and Canadian dollar. Tonight we have the Federal Reserve speaking. Their forward guidance will be extremely important. Tomorrow we will have the Bank of England and the Swiss National Bank. So that's the end of today's session. Hopefully you found it educational and informative. I cannot see any other questions. It looks like I've answered all questions. So it was great to have you here. In the meantime, enjoy the rest of your evening. Trade safe, trade responsibly. Hopefully you found today's session informative. In the meantime, goodbye.